See, when you actually start investing, after now what we were doing is we were looking at the various products of investment. We were looking at the risk return profile, right? We looked at so many investment products and stuff, right? Now the question comes is when you are actually going to form a portfolio, right? And that comes with the practical portion. Okay. Now, when you are forming a portfolio, when you look at an individual and then that is the time when you actually try and understand what is it that the individual needs. Now, before you decide that this is the kind of investment, and these are the kind of products that I want to sell to this guy, right? I need to understand the guy very well. Now, how do you understand the guy? Now, there are a couple of things in his background that you need to look at. The first thing, for example, one is age, second is income, third is number of dependents, fourth is something like past wealth, fifth is maybe cultural patterns, sixth something in terms of his marital status, seven it could be whether his spouse is working or not working, it could be something in whether he has inherited wealth or not, it could be something with regard to the kind of job that he has, right? Before you decide that look, you need to invest in this kind of investment or this kind of investment, the first and foremost you need to understand is what is it the kind of investment that one he is comfortable with, two, is that kind of investment something that will be able to achieve his particular goals and objectives, right? So you have to understand the various issues surrounding the person before you actually suggest him something, okay? And then one, you move into a broad allocation, and the second is then you break it up into a step-by-step allocation. Okay? So now, assuming that you have some details, right? So the first thing when you go to an individual is you will ask him details about his age, income, his kind of job, what is the salary that he is getting, any other income from any sources, what are his particular assets, is his spouse working or not working, is his job regular, is it permanent, is it government job, is it private job, how frequently does he change his jobs, how many dependents does he have, what ages they are, does he have any aged parents, is he secured or not secured, what kind of insurance policy does he have. Right? Now those are some aspects. Okay. Then after that, you will be looking at his broad breakup of his income and expenses. Okay. When I say broad breakup of income and expenses, is, as I said, one, you have to diversify and see the income that he is getting from various sources. Or, for example, he is getting salary income. Now, what portion of that income is from salary income, and what portion is he getting from sources which is not so permanent? Okay. And how permanent even is that salary income? Right? Is it based on a fixed component or is it based on some incentive based? If he is a business person, then in that case, again, what kind and is it what kind of variations are going to be there? And so you have to look at it whether it's a permanent or is there some fluctuation? Secondly, you look at the expense pattern of the person. Now, depending on, let's say I look at you, I look at you, right? Now, possibly both of us are belonging to a similar socio-economic pattern. Okay. But can I say, let's say, assuming that you guys have probably gone to the same school, college, studying the same place, right? But can I say that your spending pattern and his spending pattern is the same? Would you be able to say that? Right? Assuming that you have, why would that not the spending pattern, not be similar? Though you are belonging to a similar pattern, you've gone to the same school, college, etc., etc. But what is it? What is the factor that causes you to, spend in a different manner and you to spend in a different manner? Is there something?
Habits.
Okay. Taste. Aspirations. Right? So when you have this kind of a thing, and then in that case, even in the terms of the expense category, you have to look at the expenses and again the breakup of the expenses. Right? Now there is some aspect of it that again is flexible. Something is fixed and something is again semi-fixed. Right? And again you have to look at the expense pattern over months, days, years, right? And over months, right, on a yearly basis, and see again how much is the ability of the person to save. Right? And when you say save, then obviously to invest. What is the cash surplus or investment that he made on a year-to-year basis? And even in the expenses, whether or not there is some expenses that possibly can be reduced in order to, let's say, meet his objectives. Or some people will not compromise on their living standards at all. But some people, if you say that, okay, fine, you need to send your children to good school, are you in a position to cut down on expenses? Okay, fine. These are some expenses which I find wasteful. Possibly I can cut down on those. So there will be different classes of that, right? So once you have done that, then the third step you have to do is actually assess the risk tolerance of the. Now, when I say risk tolerance of the guy, right, the risk tolerance of the guy is a set of questionnaires and a set of particular questions that we ask, and we try and assess that how open is he towards risk, right? Is he, how comfortable is he with risk? Now, though I may use any point of time you go to a portfolio manager, he may ask you to fill up a risk tolerance questionnaire. There is no definition about it, in the sense that, you know, if I say that the guy is coming as risky, that actually the guy is going to be something that he would like to invest in a risky portfolio. He may be risk-taking in nature, but actually when he goes and selects investment, not necessarily that he will select a risky portfolio. A risk tolerance questionnaire is subjective and is not totally accurate in all cases. But nevertheless, over a period of time, right, depending on the kind and quality of the question that you use, to a certain extent, one can elicit some kind of information about the risk tolerance of the guy. So your questions have to be worded very carefully. You have to put the guy into certain amount of situations. For example, let's say one kind of question could be that, okay, if the value of your stock portfolio goes down by 20%, right? Will you continue to hold the portfolio? Will you continue to sell it? Or would you take this as an opportunity to buy more stocks? Right? What would you do? So depending on what the guy will do. For example, if the guy says that I would like to buy more stocks, in that case, the guy is risk-taking in nature. If he hold on, maybe something in a more balanced kind of a. But if the guy says no, I will immediately like to sell off the stocks, and obviously the guy is conservative, he can't take risk. So this and couple of so many other questions, and there are a variety of risk tolerance questionnaires that are there available.